We're nearing the end of the year, and that's time to start reflecting on 2020. No, it's not. It's time to start looking forward to 2021, and that means looking forward in your finances. It is time right now to update your 3 bank account system. I'll explain what that means coming up. My name is Mike Bernard. I am the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Okay, so right now, I don't know when you're consuming this. I'm recording it near the end of 2020. Thank goodness. We're looking forward to 2021. And let me tell you, one of the disciplines that I do and we recommend to all of our clients about this time of year. Typically around this time of year, you're taking some time off to either avoid the in-laws or spend some time with family, or maybe just chill out for a little bit. I know I am, and one of the things that I do, because I'm a geek, is I update my budget. But really, I update my 3 bank account system. And why is this a good time to do it? Not only are you off of work, likely you're taking some time off, but 2, your income and some of your expenses may have changed for the next year. And in addition to that, this is a great time to set, what do they call those? Resolutions? I call them goals. And some of those are short term, some intermediate term, some are long term. So now is a great time to look at your overall cash flow management system, your spending plan. We call it your 3 bank account system, and make sure everything is up to date. And it's not just, does it pass the smell test? No, just go through and update it. I do it every time this time of year. And so let's recap here. The 3 bank account system, if you haven't heard us talk about that before, it's really taking a look at your overall cash flow system and planning it out very, very intentionally, okay? We should have 3 types of bank accounts, okay? And the very first one is for all of your immediate spending, okay? So that first bank account, you can probably guess, that's a checking account. You've got your income direct deposited right in, automatic, right? And then you've got all your normal monthly bills coming right out of that, okay? And so your mortgage or your rent's coming out, your car loan, any other loans you have, you got your Netflix, your Disney Plus, your grocery bills. Some of those are fixed expenses. I can tell you exactly what they're gonna be for the next 12 months. Some of those are variable. We spend about X amount at the grocery store on a weekly basis or on a monthly basis. So all of that, that's your immediate spending. It's the regular stuff that happens like clockwork each and every month. And so you want to chart that out, usually in what's called a monthly budget. And you don't need to call it that if that's a 4-letter word to you or feels terrible, but it's, all right, how much money do we expect coming in every single month? And then what are the normal monthly expenses we expect to be there every single month? And what's the amount? The mortgage or rent is this. The student loan is this. The car loan is this. The grocery bill is this. The utilities are this. We go out to shopping and spend this much. Blah, 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 right? Lay it all out and be honest with yourself. How much is coming in? What are all the monthly expenses? That's your immediate spending, okay? Most of us like to have a float in there because with cash flow, it ebbs and flows, right? And so most of us like to have $1,000 or a couple $1,000s of cushion in there. If you get it down too tight and the timing doesn't work out just right, then you might overdraft, and you don't want that. But it's really personal preference what sort of float you want in there, all right? The next, I'm going to jump, that's the first bank account. Let's jump to the 3rd bank account, because you know that one too. The 3rd bank account is a place where you put money set aside just in case something awful happens. It's called your emergency fund. I prefer to call it your financial confidence account. Ideally, you dump money in this account. It's a separate account, okay? Separated from all your monthly expenses, all of that activity. It's separate, and it's there for a rainy day, or if an emergency comes up or you need to get your hands on some money, you've got a chunk sitting right here. So ideally, a chunk of money goes in and it never comes out. And it really would only come out in event of an emergency. And if you do bucket number 2 really well, those emergencies will be very few and far between. Okay, so bucket number 3, that's your emergency fund. That's your financial confidence account. What type of account is that? I like a money market. It's got to be FDIC insured, it's got to be free, and it's got to be liquid, okay? But it's once it meets those three rules, the money market is the one that usually pays you the most interest rate. Right now, they all are terrible, by the way, but I use an online money market. I'm not going to tell you which one because I'm not endorsing anyone, but an online money market, it's got to be FDIC insured, it's got to be free, it's got to be liquid, but then have it pay you the most interest rate. And way back when, that was paying about 5%. Oh boy, a year ago it was paying 2%. Today it's probably paying 0.5%, something like that. How much should you put in there? Well, usually it's 3 to 6 times whatever that bucket number one spending amount is. That bucket number one, where you tally up all your monthly expenses, usually it's 3 to 6 times. That's a good rule of thumb that you should have in this bucket number 3 emergency fund. So we've got your everyday expenses, we got your rainy day or emergency expenses. That's bucket 1, bucket 3. Bucket 2 is the magic. That's the magic. We call that delayed spending. So if this is all your monthly spending and this is all your emergency spending, what about all those non-monthly but non-emergency expenses? I mean, the expenses you know are going to come up, but they don't come up every single month. Yeah, those are budget killers. Those are reasons you have credit cards. They are their source of fun and source of pain in your financial life. That's the reason why you say, I feel like I'm taking 1 step forward, 2 steps back, or 2 steps forward, 1 step back, whatever. I'm not making progress. It's all this bucket number 2. So what is that? That's Christmas. That's vacation. That's life insurance. That's home improvements. That's car repairs. That's health insurance deductible. Any expense that you can say, yeah, that's probably going to come up. Or say, I actually want to make room for this. I want to go on vacation. I want to pay my life insurance in the cheapest way possible. I know I'm going to have to put new tires on the vehicle. Stuff that you know is going to come up. And you can reasonably expect, guess how much it's going to cost, but it doesn't happen every single month. So the months that it does, it would just destroy your budget. And it's not really an emergency, and you don't want to raid your emergency fund. That's where you lay out all of those potential expenses. I mean, all of them. It's like, I don't know, we've charted it all out. It's like 19 of them or more. And you lay all those out, figure out how much it will cost on an annual basis, divide that total number by 12, and have that money going directly into bucket number 2, a savings account, bucket number 2 every single month. What I do for some of these bigger ones is I divide it by 26, have it go every paycheck. Some of them we divide it by 52 and have it go every single week. The key is figuring out how much on an annual basis you need and then automating the transfer to it, okay? So that then Christmas next year, or spring break, or when you need tires for the vehicle, or a car repair, or car replacement, or whatever it is, when that need comes up, or a want, the money's there. The money's there. Doesn't disrupt your monthly cash flow, and it's not a true emergency, so it keeps that emergency fund intact. All right, that's the 3 bank account system. Why is it time to update it right now? Number 1, your income and expenses may have changed. So bucket number 1, you've got to make sure still fits. Your income might have gone up, it might have gone down. Your healthcare expenses might have changed. That could have influenced things. You might have just refinanced your mortgage, so your payment's a little bit less. Or maybe you went to a 15-year loan, so your payment's a little bit more. Disney Plus subscriptions going up, right? Some of these, you might look back at your budget and say, you know what, we are actually spending more money at the grocery store. Or we haven't gone out to eat in forever. Once everyone gets a vaccine, we're going to start doing that. Update your budget, make sure it all fits. Then, second, look at that delayed spending, that bucket number 2, and say, are we setting aside the right amounts? Are we saving the right amount for that home improvement? Do we plan to buy new furniture this year? Are we wanting to buy a new vehicle this year or next year? What sort of vacations are we taking? Look at those amounts that you're setting aside and make sure they're the correct amounts. I just changed mine for medical expenses. We're setting money aside there to pay for our medical deductibles, and I'm tweaking the way that I'm doing that. So we just changed that number. We're also hoping to get a new vehicle for Cindy in the next year, my wife. And so we just changed that number. So make tweaks there and make sure that the money you're saving into that delayed spending fits within your monthly budget, right? Because between bucket number 1 and bucket number 2, that's got to fit with your total income. And then 3, your emergency fund amount shouldn't change every single year, but it's a good time of year to just look and say, yep, I've got 20 grand in there. Yeah, that still feels good. Or you know what, I've got 25 in there, 25,000, that still feels good. Or I've got 5 grand in there, that feels right. Or I've got 10, I think we need to move that to 15. Let's figure out how to do that. So just make sure that that's still a comfortable and appropriate amount for you. That's a 3 bank account system. The beginning of the year is a great time to hit the refresh button on each of those and make sure you've got a stable financial life. If you're watching this and it's not the beginning of the year, but you haven't done this work in a while, work with your CFP, get this work done so that you've got a solid, stable financial foundation. Your CFP helps with that. If you don't have a CFP, you can always contact one on my team. Find us online, wisemoneyshow.com or korhorn.com. That's Korhorn with a K. You can also send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.